Greetings! In this video, we are going to talk about the Trendline Breakout Strategy. So what you're going to get from this video is what is the Trendline Breakout Strategy, how it looks like, how to trade it. We are going to look at the different types of Trendline Breakout Strategies out there in technical analysis. And then we are going to look at the real life examples of where to enter and where to take your profit. So let's do this. So welcome to the chatting area. Today we are talking about the Trendline Breakout Strategy. The Trendline Breakout Strategy. Now this is one of the simplest strategies in technical analysis. Just as the name goes, it is just simple. It just means the breaking of a trend line. That's the whole strategy. So we are looking to find an entry, right? We are looking to find an entry when there is a break of the trend line. That is just it. We are looking to find an entry when there is a break of the trend line. Now, obviously, to succeed, to be able to trade this strategy very well, you need to know two things. First one is how to draw a trend line, and second one, be able to identify support and resistance levels, right? Support and resistance levels. So first of all, let's go to how to draw a trend line. Now, I'm sure majority of you know how to draw a trend line already. But for the sake of those who do not know how to draw a trend line, let's go over it again. So how to drawing a trend line is quite simple, right? So as we can see here, the market is giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is just telling you that this is an uptrend. So what a trend line is simply is just a line connecting the lows of the trend. Okay, so it's just a line, okay, connecting the lows. So if I have a line and I let it connect these ones and I extend them, it becomes a trend line. It becomes a trend line. This one is an uptrend. That's why the trend line is going this way. If it's a downtrend, you see it go this way, right? So yeah, so this strategy is what you need to know how to draw trend lines. So the second one is what you need to know how to draw support and resistance levels. So yeah, very simple, support and resistance levels, right? Support and resistance levels. So these are levels where price has tested, just like this level. And see that if you look here, price has tested here, price came back up. So it's like here, the level is quite great. Price is respecting this level very well, because when you push it to this side, you can see that something happened here as well, something happened, came all the way here as well, something happened. So it's very simple. You need to know how to draw just those two things, right? Just those two things. It's very, very simple. So now yeah, it's very, very, very simple. So let's go to some of the examples, right? Go to some of the examples. So we can see here that we have a series of examples, 1, 2, 3, 4, right? This one is an uptrend. This one is also an uptrend. This one is a downtrend. This one is a downtrend, right? So the trendline breakout strategy is just signifying a start of a new trend. Okay, it's just signifying a start of a new different trend. Okay, so we can see from here that here the market, example 1, the market is moving up, forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So here the market broke the trend line. Okay, came back to retest this support level. Now turned to resistance. This support level, it came down, retested the support level, and did what? And went back down. So this is where we'll be looking for our entry. And some of the things we'll be looking out for will be this, either an engulfing bar, a pin bar, something to show a bearish presence, something to show that the bears or the sellers are in what? Power. That is, if it's an uptrend, you are looking for sellers to be in power so that the thing can go down. If it's a downtrend, you are looking for buyers to be in power so that the thing can go up. Remember, this is a trend changing strategy. Okay, this is a trend changing strategy, right? So example number 2, we can see that what? This is the downtrend of this. Okay, so price is forming lower highs, lower lows, lower highs, lower lows. But then instead of it coming to respect this trend line like all of them, it broke out the trend line and did what? Came back to retest this previous resistance, now turned support. So this is where we look for our entry and then what? We buy there and price goes up again. Now this is another example. Okay, sometimes price doesn't turn at the support level. Sometimes price comes all the way back up to test the trend line itself before dropping. Like this example we have here. We are forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Then here something really happened. Price broke the trend line, signifying that, okay, the trend has changed from an uptrend to a downtrend. Now, price came back up to retest the trend line itself, not a support and resistance level. It came to test the trend line itself, as well as a previous support and resistance level here. Okay, as well as a previous support and a zone, previous zone here. So now we have 3 confluences, right? The first confluence is what? First confluence is that what? Price has broken the trend line, signifying that, okay, there might be a change in direction, a change in trend. Broken the trend line. Second one, it has come to retest the trend line again. Third one, it has tested both the trend line and the previous zone. Okay, then there is even a fourth one. Okay, it has formed a head and shoulders pattern here. Head and shoulders pattern, if those of you who don't know, the head and shoulders pattern is a reversal pattern. It has formed a head and a shoulders pattern here, showing that this thing will be heading downward. So this is where we look for ourselves, we look for a bearish presence, something that shows that the bears are in power. Then what we sell here. Same example here, we can see that what the market was forming what? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then it broke the trend line, the first one. Second one, it retested the trend line again, the second one. Third one, it tested the zone. Fourth one, it has formed the head and shoulders pattern. So 4 confluences, right? So this is where we enter and then we buy. So now I'm going to show you a real life example from the chart itself, a real life example from the chart, so that you'll be able to see how it looks like and how to trade them in real life. So let's go to the charting area. So in our first example, in this example, we are going to look at gold, which is XAU USD. We're going to look at gold XAU USD. So we can see that gold is clearly in an uptrend, forming higher highs, higher lows, higher highs, higher lows. But this is where the trend line breakout strategy comes in. So price was able to break this trend line with a very strong bearish candle, if you can see, very strong bearish candle, very strong bearish candle. So price was able to break it with a very strong bearish candle, right? And then price is heading back to the zone, right? So I am looking to enter this position when price comes back to retest this zone, which is a previous support and resistance zone, right? So that is how I'm looking to enter this previous support. And we can see that price has come all the way to come and test the zone, right? So I'm going to enter this. I'm going to enter this trade. I'll be taking a sell a short position, right, from here. I'll put my stop loss slightly above the high. Stop loss slightly above the high of this, right, slightly above this, right, just in case the price comes all the way to touch the trend line in reverse. That way I know that, okay, I have security. So I'm going to target this position. I'm going to target this. So this is this has a risk to reward ratio of 2.7, right? 2.7. So let's see how this trade plays out. Let's see how this trade plays out. Okay. So we can see that we are currently in profit. You can see we are currently in profit. Wow. It looks like something happened here with the news release or something. So this is why it's very necessary to position your stop loss at a very good point. Yet if I had placed my stop loss here, the market would have taken me out, because this is where majority of people would have placed their stop loss. But placing it here has given me enough room, right? So we are back into profit. Let's see if the market hits. So we are in, wow. We are almost hitting take profit. So over there, you can see we just smashed through take profit. Very simple and easy trade. Very simple and easy trade. So this is the first example, right? And if, okay, so I decided to take the position. I decided to take my take profit here, but yeah, I decided to take, because I don't want to be greedy. You know, if you are greedy in the market, you're going to lose everything. But if we look closely, we can see that the market continued to drop down, right? The market continued to drop down, right? So if you would have held this position, you would have realized that the market continued to drop down to this position before reversing again, right? But we don't want to be greedy. We took our profit here, right? We took our profit here, placed our stop loss here above the previous high, took the profit here. Very simple. No need to be greedy about it and do all sorts of things, right? So in our next example, we'll be looking at GBPJPY. So over here, we can see clearly that the market was in an uptrend, higher high, higher low, higher high, higher low. Then it came to form a double top here. So even over here, I'll be expecting some trend, a reverse in trend, because a double top signifies it's a trend reversal pattern. A double top is a trend reversal pattern. So can see, so now I can see that price has violated this trend line. So what I'll be looking for is that price should come and retest this trend line, then I'll take the trade. If not that, price should come down, okay, retest this zone, then I'll take the trade. All right, so let's see how it goes. All right, so I can see that right now price has come towards retest this zone, right? So I'll be entering my short position here. With my stop loss slightly above the previous high, and my take profit at this level. Right. So my take profit at this level. Right, this is a 1 to something trade. Right, so 1 to 8 trade. 1 to 8, risk to reward ratio 1 to 8. So yeah, I mean, I could have placed my stop loss here to give me a higher risk to reward ratio of 6.29, but I'm not here for higher risk reward ratios, right? I'm here not to get stopped out. I'm not here to be greedy, right? I'm here so that the trade plays out on its own. If I'm stopped out, then I know that I am wrong. Okay, so then let's go. I could have also targeted down here, but as I told you, I'm not greedy and I'm here just for something. Okay, so let's see how it turns out. So currently price has retested it again. It has retested, so currently we are in profit. So it looks like price is consolidating in that region. It's consolidating in that region. Let's see if it will be able to break. Let's see if it will be able to break the consolidation and come down. So we are still consolidating. So over there, just here, price smashed our TP. So we can see that price has smashed our TP. So this is another win. This is another win trade. Now, if I play it, you can see that price came all the way down to this region. So this strategy, I mean, is also good for swing traders as well, right? You can see price came all the way down to that region, and you could have smashed my TP, right? You could have smashed my TP, right? So this is also a very, very good strategy, very, very good strategy. But I choose to take my position here, right? Because it's better to be here than to come down, right?